Hello there, everyone, and thank you so much for joining us for one of our weekly 3M employee webinars. My name is Samantha, and I am your moderator today. In just a second, we're going to be joined by Tyson Mavar, one of our senior financial advisors. Tyson is going to be speaking to you about the upcoming pension freeze that was announced for 3M employees. And after his presentation, he'll also answer some questions if they come in regarding the pension freeze or anything else you may have asked throughout his presentation. While he is speaking, I will be entering some links into the chat box. Feel free to monitor that chat box. There will be some links to his calendar, so you can get on his calendar and speak with him directly about your specific concerns or situation, as well as the complimentary cash flow analysis that he will also go more in depth with you about throughout his presentation. And as a quick reminder, we are not affiliated nor endorsed whatsoever by 3M. We are a completely independent group of financial advisors here. So please also keep that in mind as you are listening along with Tyson today. And without further ado, let's jump right into it with Tyson Mavar.
Thank you, Sam. Thank you, folks, for attending our webinar series today. My name is Tyson Mavar, one of the 3M focused advisors for the retirement group. And on today's webinar series, we're going to talk about some of the recent changes announced and some of the important considerations for somebody who works for 3M or who used to work for 3M based on your retirement decisions from the company. Now, many of you probably heard earlier this year, 3M announced that they will be freezing the pension plan for those that still qualify for the pension plan. Now, fortunately, this will not be happening until basically 4 years down the road, the end of 2028. So you will still be accruing benefits on your pension until that time. And after that time, you will be, of course, getting new benefits through your 401k plan, but no longer getting pension accruals once they freeze that pension at the end of 2028. Now, the way this is going to play out, and 3M no longer offered pension accruals for employees hired after 2009. And so this is just a move that we've seen really all over the industry and all over the country, really, companies looking to get out of the defined benefit pension business because of the liabilities being very unpredictable. People are living longer. There's a variety of reasons they're doing this, but we just saw ConocoPhillips do something recently very similar, wherein they froze pension benefits and they are now going to be contributing to 401ks at a faster rate for employees. There's pros and cons, and we'll talk about some of the issues here that you want to consider. But the main thing that you want to know about is this retirement income account. It's going to be an additional 3% cash contribution made to eligible employees, regardless of whether or not you contribute to your 401k plan. So that's the benefit of this change. Of course, the cost is you're not going to have your pension, and there's some pros and cons to that as well. Now, retirees, if you are already retired from the company, this will not affect you. If you're already collecting your pension, that pension is already set anyway. However, today, October 1st, 2024, is the first day of Met Tower Life taking over. I think it was close to 60% of pension liabilities for former employees of 3M, people who took the annuity and are receiving a monthly benefit for the rest of their life. So that is a pretty big change that we also saw this year. If you're a vested former employee, you will also not be affected, because if you left the company, your pension was effectively frozen upon your departure from the company. But for active employees who were hired prior to 2009, participants of the pension plan, this is who this freeze is going to affect as of the end of 2028. Now, this is one of the rare situations where the company is giving more than 4 years notice, close to 5 years notice for employees to prepare for this. So what are you actually preparing for? Well, the difference between 401ks and pensions, for the most part, is pensions are fixed income for life, and in some cases for 2 lifetimes if you receive a joint survivor annuity. 401k plans are a pot of money that you have control over investments on, and you have a lot more control over while you're still working. So many people are seeing this as a benefit, in that you're going to have more control to grow this money while you're still working, whereas you don't have much control over your pension while you wait to receive it after you leave the company. There may be a consideration for exploring lifetime income options after you retire, given that you may not have as much lifetime income as you originally had planned to have if you had been accruing pension benefits your entire career with 3M. Most people's retirement plan will have lifetime income from Social Security. You may have a spouse involved in the income sources. And for 3M employees, you also have this pension plan, but this is going to be a reduced consideration for retirement plans going forward, especially for employees that were hired maybe right before 2009. There's going to be more onus on you to figure out the structure of your income plan. It may mean purchasing an annuity from an insurance company after you leave the company. It may just be being more proactive on your investments and how you manage your asset allocation with your 401k and your other retirement assets after you leave the company. But it's certainly going to mean a little bit of a change, especially from that income for that you may have previously been expecting and may not any longer have as great of an income for. Now, the risk is going to be on you, of course. In a 401k plan, you could take a lot of risk. You could take very little risk in your 401k plan, which is different than when that money was only going into your pension plan. You don't have much control over the companies responsible for managing that money. And there's even less control after you retire and take the pension because it's going to be in the form of a lifetime payout option. Whereas now you have also the responsibility not to overspend in retirement. And this is something our retirement cash flow analysis, something we do complimentary for anybody at 3M. If you haven't done one yet, I strongly encourage you to take advantage of this. Was built to keep people on track, not just prevent them from overspending, but to make sure that they're being tax efficient with their decisions, not just in retirement, but also while they're working and continuing to save in the plan, making considerations for things like Roth conversions, for life insurance, for your asset allocation within your 401k leading up to your retirement. There's a lot of different variables here that we want to understand to create a successful retirement plan, or at least to improve the probability of success in somebody's retirement plan. Unfortunately, what we found historically is that 74% of Americans over the age of 50 don't even have a written plan for their retirement, which we think is absolutely unacceptable, given that a variety of financial advisory firms, including ours, will do this for you for free in an effort to get to know you and for you to be able to get to know them. And in our case, this is how we've grown our business for the last 30 years, is by doing some goodwill on the front end for folks. It might not be a great fit. You might decide that there's a better fit for your business out there, but we're happy to do some work for you on a complimentary basis, because at the very least, we're confident you'll get enough value to help us grow our business by referring us to some of your coworkers, even if you don't end up becoming a client of ours once you get to retirement. So take advantage of that if you haven't yet done so yet, or if it's been a while since we've updated your analysis, let us know. We like to offer to do that at least annually. With that, we're going to wrap it up for today. Although if we have any questions, Sam, we'll open it up for any questions if we have time.
Thank you, Tyson. Yeah, we have time. I think we're just going to answer one question today. This one question: how will the pension freeze affect the benefits I've already accrued?
They will not affect the benefits you've already accrued.
Mm-hmm.
In fact, they won't even affect the continued accrual until the end of 2028. So just over 4 more years. They're not going to affect certainly anything that you have accrued up to this point, though.
Alrighty. As a follow-up to that, will the vested pension continue to grow in value until 2028?
Yes, you will continue to get accrual, which is essentially growth on your pension payout until the end of 2028, at which time the pension will be frozen and you will no longer get additions into that pension plan. However, you will get compensated that to some degree with additional compensation into your 401k plan.
All righty, Tyson. That was all we had time for today. We want to thank everyone for joining. As a reminder, those links are in the chat box for you to take advantage of. Please make an appointment with Tyson Mayvar to speak to him directly or to get started on that cash flow analysis. Thank you, Tyson, for all of your help today. And thank you, everyone, for joining. We hope to see you on another webinar very soon. Bye,
Thank you,
everyone.
Sam. Thank
Bye.
you, folks.